Lou Basenese is with me this morning. All right, what do you make of the inflation news? I'm saying it's benign.
I agree with you. It's benign. It's really easy for the Fed to control an inflation flare-up versus a labor cool-down. So I think this is just more of the same direction. Fed's going to cut rates. Wildly, you pointed it out, over an 80% chance of a Fed cut. A week ago, it was a 50% chance that they would hold firm. So investors are acting a little bipolar about it. But the trend is our friend here. Rates are going lower.
Yeah, okay, got it. Meta reportedly is going to spend literally billions of dollars on Google's AI chips. That will be competition for Nvidia, and Nvidia is down this morning. My question, Lou, is why is Meta going with Google's chips?
So it's Google and Nvidia. They've already secured over $100 billion worth of chips from Nvidia. They need more chips, and here's the key difference. Nvidia sells generic AI chips. Think of them as Swiss Army knives. Google's chips are more customized for data centers and AI workloads. So Meta is simply making sure that they have enough supply of chips to do all the tasks that they need. It's not a either or. It's not a zero-sum game. It's both companies. So this reaction with Nvidia, I think, is completely overdone and unwarranted.
Oh, okay.
Yeah. I'd be a buyer here on Nvidia's dips. This is not a demand. I mean, remember last week, Jensen Huang came out and said sales and earnings are going up next quarter. He knows that more sales are coming in. They can't sell enough of the chips.
Good stuff, right? Thanks, Lou. You're with me for the hour, by the way. Gotcha. Come back in here, Lauren. Take us through. Oh, we got the September retail sales report.
I just want to point out that I have started my Christmas shopping and I have started wrapping it also.
Whoa.
For the month of September, I'm an overachiever in this department. Retail sales slowed down a bit, rising 0.2% from August and 4.3% year over year. Money we did spend went to clothes, cars, and food. Each of those categories rose around 5%. Online sales rose 7%. Gas fell by 2%. There you go. Those are your numbers so you can see where we allocated our spending. The consumer is still holding up. This number factors into third quarter GDP.
Would you say that I'm cheap if I were to give American Express gift cards to all of my grandchildren?
I love it.
That's the best
Kids
idea.
love gift cards. I
Exactly.
used to be anti it, but now it's a great thing to do. Take them to the mall, go spend.
There'll be half a dozen Sephora cards out there, I'm sure. You know.
Indeed.
You're not cheap unless there's not enough zeros after the
Exactly.
gift card. That's all.
Now this.
So the information is reporting that Google is renting out advanced AI chips, or TPUs, to Meta for billions of dollars to use in Meta's data centers. Google usually uses its own chips in its own data centers. They don't rent them out, but it's an AI war. They're looking to take market share from Nvidia. So what's the difference between a TPU and a GPU? I think the answer is range. Think of a NASCAR versus a Corvette. A TPU is the NASCAR. It runs only on the racetrack. It's customized. Yeah. Corvette can take you anywhere. That's the GPU. So that's the difference. But you have Google now infringing on NVIDIA's turf. It's been a great couple of weeks for Google. And if you look at Broadcom, they designed Google's TPUs. That stock is also way up today, whereas NVIDIA and AMD are down.
This is fascinating. So
yeah, thoughts of Nvidia's demise are being greatly exaggerated right now. Google's not going to eat Nvidia's lunch. It's going to be an additive game. Google's now getting into it. I just love the fact that beginning of this year, everyone hated Google. Now it's the favorite AI stock. They said the AI was going to disrupt it. We were a buyer. I would continue to be a buyer here. I think 400 plus is in the cards for Google.
326 new high just now.
326?
Yeah.
Just like that. Okay, Apple, a rare announcement of layoffs. Yeah, that is rare indeed. How many and in which department?
Dozens in the sales department. This is according to Bloomberg. Apple, they say, is simplifying the way they sell their products to businesses, schools, and governments. Unusual, as you say, to see these cuts, but the report says what Apple is trying to do is eliminate salaries while shifting those sales roles to third parties. Why? They're on track to deliver $140 billion in revenue this quarter. Record high. But I guess everybody is trying to save money.
That is an all-time high for Apple. 278.55, the all-time high.
All-time high.
This is just regular right-sizing for Apple. I mean, we're talking about dozens of jobs, not to diminish those people, but we were talking about tens of thousands for Amazon and others.
And Meta.
Yeah, 278 on Apple. God. Several retail companies issued their earnings this morning.
Yep.
Best Buy.
Can I say they're a discounter? I mean, they're selling Chromebooks for like $119. That's great. Great deal, right? And it's not even Black Friday yet. So they did better in the quarter, and they raised their annual revenue forecast because they're betting on strong demand to continue for the discounted products, but also so many of us upgrading our technology and spending money on the pricey new gadgets. So they're kind of doing both. They now expect their comp sales to rise 1% on the year after previously saying they would drop 1%.
Okay, another retailer, Abercrombie.
They have the Hollister brand, and it's red hot right now. Also, a recent deal with the NFL that's helping them sell their clothing like $100 jeans. Look at the stock. It's up, let's call that 20%.
You call it 20%, you're right. Dick's Sporting Goods.
A beat and a raise, but their profit did slip because turning a company around is expensive. They have to absorb Foot Locker. They bought it. So their same-store sales did grow 5.7%. That was better than expected. Customers came in more, they spent more, but all of that came with the cost, and the stock is down $1.
You know, I saw Kohl's earlier this morning, and that thing was straight up, and it's up 30% now. What's the story?
The story is they offer value for a customer, and they keep going in. They swung to a profit, a surprise profit. Last quarter, raised their outlook for the full year. Customers keep going in because they sell discounted items, and management expects that to continue in this holiday quarter.
I always find this kind of stock rather boring.
I do too.
But
I've never been
30%,
intrigued by
30%.
retail sales, but
No.
retailers. But look, I can't argue. If you like Kohl's and you're up 30% this morning, kudos to you.
In fact, all of the retailers are doing well today.
They
Except
are
Target,
yeah,
probably, right?
Look, Alibaba. Okay, they're down $1. That's it. Is AI helping them at all?
So they're spending on their new AI abilities. They have an agent called Quen. Saw 10 million users in just 4 days right after they released it. Alibaba wants it to do things like personal shopping, make appointments, navigation, basically agentic AI. To rival Google's Gemini, as well as OpenAI's ChatGPT, which are not available in China. So Alibaba is like the Chinese Amazon. They had a successful Singles Day, price cuts, instant delivery, all of that good news ate at their margins. If you look at their net profit, it fell by 53%. I'll call the stock slightly higher on the news.
On China, I was hearing this morning that some of the delivery services are doing instant delivery. You order it, and it's there in an hour.
Yeah, that's why their
your
margins
apartment.
were hit.
That's good, isn't it?
Yeah, it's better than going to the store.
I guess it is.
Wait, are you saying China's version of Amazon is better than ours?
No, I'm not saying that at all. I would never say anything like that.
I mean, but that sounds great. I kind
1
of
hour
wish
better,
Amazon would offer that.
You recommended this one?
Yeah.
Symbotic.
Symbotic back in April this year, about $19 a share when everyone was going in on the robotics craze. This is a company now that, look, huge beat. They reported earnings growth or sales growth of 26% for the year.
Yeah.
They're in the warehouse automation space. Walmart, Amazon customers, and now they're getting into the healthcare space.
35%.
Up 35%.
Kohl's
today.
30%.
Could go to 100 plus.
He just named it. They're getting into healthcare. They have a new contract with a company called Medline that gives them a different avenue to compete in. So they do the warehouses for Target, but also healthcare.
Now, you've got your stock pick this morning, and that stock pick is, put it on the screen.
Eli Lilly, this is the next
Lilly.
trillion-dollar market cap stock. It finally hit it. I said that back in April of this year. Everyone is now paying attention to Novo Nordisk, the competitor with Ozempic and Wegovy. Eli Lilly has a much better pipeline, will continue to evolve and dominate the GLP-1 space. And then we talked about it last week. They're getting into the amylin receptor space, which targets the brain receptors and could be more effective. So just a better pipeline, a lot more upside to go. This is going to be the company with the best-selling drugs in the world.
Quickly on TransMedics Group.
TransMedics is organ donation upgraded with the digital age. So instead of putting organs that are up for donation in literally a cooler, this has a life support system, which makes most organs more available and taking it from 30% of organs being used now to upwards of 80%. So a vital need for this company.
That would work for me, I gotta say. If I need an organ, I want one fast.